Welcome back, future CPAs. In this series, we're breaking down the risk-based financial statement audit. Today, we're diving deep into Phase 3, Supervision and Monitoring, the engine that keeps your audit on track, compliant, and high quality. So if you're new, catch up on client acceptance and audit planning. So I put the link in the description below. If you're ready, then let's get started. We will begin with an overview of risk-based auditing, discussing its importance and how it differs from traditional auditing practices. Next, we will examine the supervision aspect, including the role of audit managers. Following this, we will focus on monitoring audit progress, tools, and techniques for supervision, and conclude with engaging examples to illustrate these concepts. So, overview of risk-based auditing. So the risk-based auditing is designed to identify and address the most significant risks and affecting financial statements. This approach ensures that audit procedures and audit resources are all focused on areas with the highest potential impact on the integrity of financial reporting. Definition and importance of risk-based audit. First, focus on risk assessment. A risk-based audit prioritizes identifying and assessing risks that could affect financial statement accuracy, ensuring a thorough examination. The second one, mitigating material misstatements. By emphasizing risk, this auditing approach directly addresses potential material misstatements, enhancing the integrity of financial reports. The third one, enhancing audit effectiveness. This method improves the overall effectiveness and efficiency of audits, making audits more valuable for stakeholders. So let's talk about the key differences from the traditional auditing. So unlike traditional auditing, which often follows a set plan, risk-based auditing adapts to the unique risk of each client. Second, it prioritizes areas based on risk assessment, ensuring that auditors focus on the most critical issues. And lastly, by focusing on high-risk areas, risk-based auditing allows for a more effective allocation of auditing resources. So what are the risk assessment process? That includes identify, analyze, and respond. The risk assessment process involves identifying, analyzing, and responding to risks. The first step in the risk assessment process is identifying potential risks that could affect the client's financial statements. So after identifying the risk, auditors analyze this risk to understand their potential impact and likelihood of occurrence. The last one is responding to risk. That involves developing strategies and controls to mitigate identified risk and ensure accurate financial reporting. So let's go to the supervision and risk-based auditing. Effective supervision and risk-based auditing is crucial for ensuring that the audit process aligns with established objectives and maintains the quality. This section will delve into the role of audit managers and the organization of audit activities. So let's go to the role of audit manager. The audit manager plays a vital role in overseeing the audit team. Let's discuss this one by one. First, team oversight. The audit manager supervises the audit team, ensuring that each member understands their responsibilities and tasks. They ensure that the audit plan is executed effectively, keeping the project on schedule and within the scope. The third one, the audit manager plays a crucial role in mentoring team members, fostering their professional development and skills. They mentor, they coach, in short, they teach the staff. Lastly, they ensure compliance with auditing standards and regulations, maintaining the integrity. Take note of the word integrity of the audit process. So what is meant by compliance? From the word comply, follow or adhere or ensure that they follow the rules and regulations. So in the next, not only here in the next few slides, but in the whole duration of the audit, you will always hear compliance, integrity, effective, efficiency. Those words you need to understand and you need to know it by heart. Planning and organizing audit activities. Planning is essential to the success of a risk-based audit. The audit manager organizes tasks, sets timelines, and ensures that all team members understand their responsibilities and the audit objectives. Ensuring quality and compliance. So quality assurance is paramount in auditing. It is essential to ensure that integrity and reliability of the audit process, fostering trust in the results. Second is the compliance with standards. Again, we hear this word compliance. It is important that you understand this word because you will always encounter it throughout this audit subject. So audit managers must implement procedures that ensure compliance with professional auditing standards to maintain their credibility. Lastly, ensuring that audit findings are accurate and thoroughly documented is crucial for transparency and accountability. So what's next? Monitoring audit progress. This involves tracking the ongoing activities and assessing the adequacy of evidence collected. This ensures that audit stays on schedule and addresses any issues as they arise. Now let's go to tracking audit milestones. Setting and tracking milestones help maintain focus throughout the audit. Regular progress updates allow the audit team to identify delays and adjust the plan as necessary to meet the deadlines. Evaluating audit evidence. Okay. Evaluating the evidence collected during the audit is critical for ensuring that the findings are accurate and reliable, impacting the overall audit process. Sufficient and appropriate evidence must be collected to support audit conclusions and provide a strong foundation for the audit report. Proper evaluation of evidence enhances the reliability of the audit report, ensuring stakeholders can trust the findings. Addressing issues and challenges. The challenges can actually arise during the audit process. That's normal. Audit managers need to proactively identify these challenges to ensure smooth operations. It is also essential for audit managers to respond promptly and timely to issues to minimize the negative impacts on audit outcomes. And the last one, adjusting strategies based on identified challenges helps in ensuring compliance, again, the word compliance, and achieving desired audit results. All right, let's go to the tools and techniques for effective supervision and monitoring. To enhance supervision and monitoring in audits, various tools and techniques can be employed, including specialized software, data analytics, and best practices for audit management. All right, audit software applications. Audit software applications automate data collection, significantly speeding up the auditing process and reducing manual errors. Okay. These tools improve efficiency by allowing auditors to process large amounts of data quickly and accurately. If you know how to use the Excel, yeah, we can say that we use some Power BI, Power Query to automate some of those. But apart from the Excel, there are also other audit softwares that being used by auditors. So it's just when they plug in the figures there or some from data, then that converts to the reliable information that they can use to ask questions or to for their audit procedures. Okay, Excel for me is still in the middle, still manual. Okay. So these tools improve efficiency by allowing auditors to process large amounts of data. And then automating routine tasks. Auditors can focus on critical risks. Okay, so they don't have to do all this manual. They can focus on more important stuff. Data analytics and auditing. So the data analytics enables auditors to identify significant trends within financial data, enhancing their ability to spot irregularities. Using analytics helps auditors detect anomalies in data that may indicate potential fraud or errors. And data analytics supports more effective risk assessment by providing deeper insights into financial health and operational risk. Okay. Best practices for audit management. Setting clear objectives is crucial for effective audit management, ensuring that all team members understand the goals. The second one is maintaining open communication among team members enhances collaboration and ensures issues are addressed promptly. And the last one, fostering a culture of continuous improvement, encourages teams to identify areas for enhancement and implement changes. When you work for an auditing firm, they have lots and lots of trainings. When I was in SGB, we always have training. That's how you're going to learn and improve, and that's how you're going to keep up, with the fast-paced environment of audit. All right. In summary, effective supervision is crucial in ensuring the integrity and accuracy of financial audits, leading to better audit results. Employing a structured approach allows auditors to systematically address risk and improve the audit process significantly. The last one is utilizing the right tools enhances the quality and reliability of audit outcomes, ensuring compliance and accountability. So in my next slides, we will answer five CPALE exam type questions. All right. Okay, are you ready? If yes, let's test your knowledge. Question number 1. What is the primary purpose of direction in an audit? Okay, sorry. A, to finalize financial statements. B, to identify internal controls. C, to communicate expectations and responsibilities. And D, to test control effectiveness. Okay, you may pause the video now to think. The correct answer is letter C, to communicate expectations and responsibilities. Direction involves setting clear expectations for audit team members. All right, let's go to question number 2. Who has ultimate responsibility for the audit engagement? A, audit staff. B, audit manager. C, audit supervisor. And D, engagement partner. Okay, you may pause the video now to think. The correct answer is letter D, engagement partner. So the engagement partner is ultimately responsible for audit quality and performance. So what must be included in audit documentation regarding the review? A, names of financial statement preparers. B, details of company policies. C, who reviewed the work and when. And D, bank reconciliation summaries. Okay, you may pause the video now to think. The correct answer is letter C, who reviewed the work and when. So audit documentation should clearly indicate the reviewer and the date of the review. Okay, question number 4. Which activity is not part of supervision? A, monitoring audit progress. B, reviewing completed files. C, assigning tasks. And D, addressing audit issues. All right, pause the video now to think. The correct answer is letter B, reviewing completed files. It's a separate process from supervision. So all of this, monitoring audit progress, assigning tasks, addressing audit issues, these are all part of supervision. Now let's go to question number 5. Review procedures typically involve A, performing walkthroughs. B, testing internal controls. C, evaluating evidence sufficiency. And D, creating financial statements. So pause the video now to think. The correct answer is letter C, evaluating evidence sufficiency. Review evaluates whether the audit evidence supports the conclusion. All right, we're done. Thank you for watching, and we hope you enjoyed the content. So please like and subscribe to my channel for more interesting videos. Please, your support means a lot and helps us bring you more valuable, engaging content. So in my next video, we will answer some CPALE exam type questions. So please stay tuned. Thank you. Have a good day.